Hello traders, Gary Wagner here. Just about 10:15 in Honolulu, 4:15 in New York, July the 5th, 2016, and this is Trending Markets. We are looking at the Dow Jones Industrial Average after a long three-day weekend. Although off of the lows today, it does look like it has settled down in excess of 100 points, 108 at 17,840. S&P also trading lower when you compare the 0.61% drawdown to a 0.68% drawdown in the S&P, this being the E-mini. You can see that they're fairly comparable today, 2082, 2081. That is our current print, high 2104. And the low on the day, 2072.50. Yes, traders, we are down in U.S. equities today, down about 0.5%. Standard & Poor's off 0.58, 2083.75. Daily candlestick chart that we're looking at. This is today's action, but consider this. After the Brexit vote that came in week before last, Thursday, Friday sell-off, dramatic 600-point drop in the Dow Jones Industrial Average, a corresponding drop within the Standard & Poor's, followed the following day, coming down to these lows at about a 50% retracement, which is 1976. And then having made up that lost ground on Friday, Thursday, Wednesday, and Tuesday of last week, the fact that we're trading off about 100 today, to me, is not as significant as the way the market came back so quickly after the Brexit vote and subsequent sell-off. So while the jury is out as to whether or not we can find some support and then move back up, or whether this area will once again be an area of contention and an area in which we find resistance in the market, I have not, by any stretch of the imagination, sensed that today's trading activity in U.S. equities was all that dismal, because the bottom line is this. I expect the dollar over time to gain some strength with the fundamentals in the market. I expect gold over time to gain strength, and I expect U.S. equities over European equities to perform much better over time. Now, the one market that performed extremely poor today with a tremendous sell-off, not so tremendous considering what we've seen in crude oil, but off about almost 5% at 4.43% drawdown, off by over $2 a barrel. There's absolutely no doubt we're back now, rather than this bullish channel that we were looking at a couple of weeks back, in which it was really trading from the top and the bottom of this channel. We noticed that it absolutely broke below that channel. Once it did, we're seeing some sort of a new channel develop, which is more of a bearish channel, obviously, with our bias to the downside. I had been on record as saying 50 to 52, that should be our top in crude oil. I still stand by that, and I believe that we're not going to see crude oil under any more dramatic upside moves, at least for the next month. And so traders, lastly, I do want to take a look at the U.S. dollar index, 96.18 current print, putting it up about 0.5% on the day, 52-point rise in the marketplace. And as I said, I expect the dollar to have some continued strength based on the fundamentals that we're looking at the market. Also, I expect gold to remain solid. And considering that we've had a solid move in gold today, consider what gold really had to do to have the positive gain and to be trading up like we saw it. Take a look at the Kitco Gold Index. Dollar strength taking away about $10, $16 plus normal trading, $5.80 net change. Net change is different than what we're reporting because this is taking into account trading over the weekend, of course, but the price still the same. As I said, roughly $13.56, $13.57. That's looking at spot. And of course, right now, COMEX is higher. But take a look at the dramatic amount of movement we had to see for gold to overcome just our basic dollar strength. So what we are seeing is that risk-off mentality, obviously, and that flight to safe haven type investments. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another Trending Markets. Bye-bye.